Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and we're glad you're joining us today. We've got a packed show for you, with plenty of news and insights from the financial markets. Let's start with the latest developments in the Indian primary market, where a slew of heavyweight IPOs are set to hit the scene in October. Companies like Tata Capital and LG Electronics are gearing up to raise funds, and market watchers are keenly tracking the impact on liquidity. According to experts, the second half of the year looks promising for IPOs, with nearly 20 issues lined up already. While there may be some concerns about the effect on market flows, robust SIP flows and steady institutional support are expected to maintain balance. Foreign institutional investors, or FIIs, are also showing strong interest in participating in these IPOs, despite their muted presence in secondary markets. Now, some of you might be wondering if valuations for these IPOs are a bit stretched. And that's a fair question. Historically, issues do look expensive compared to the past. However, experts argue that these companies come from underrepresented sectors with large growth runways, offering ample scope for expansion. As we navigate this busy season in the primary market, it's essential to keep an eye on liquidity and market trends. We'll be discussing more about this and other key developments in the world of finance throughout the show. But first, let's take a look at what else is making headlines. We've got updates on the auto sector, with experts like Sudeep Bandyopadhyay sharing their insights on the performance of companies like Tata Motors. And we'll also be exploring the latest trends in the IPO market, including the shift from unorganized to organized markets. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of tech and finance, where the giants of industry are constantly evolving and adapting to stay ahead. Today, we're focusing on Amazon, the e-commerce behemoth that's been a staple of modern retail for decades. But despite its impressive growth rate, Amazon stock has been underperforming this year, rising by less than 4%, while the S&P 500 has seen a 14% increase. So, what's behind this lackluster performance? One reason could be the high expectations surrounding Amazon's investments in artificial intelligence. The company plans to spend up to $100 billion on AI this year, and investors may have been expecting more of a jump in sales as a result. However, Amazon's recent projections have fallen short of Wall Street estimates, which could be weighing on the stock. It's also possible that Amazon has simply fallen out of favor with tech investors, who are increasingly looking to other companies for growth opportunities. Palantir Technologies, for example, has seen its shares rise by over 135% this year due to its strong growth in the AI sector. Meanwhile, data storage company Seagate has benefited from an uptick in business related to AI, and its stock has been one of the hottest on the S&P 500. But despite these challenges, some analysts believe that Amazon's investment in AI will pay off in the long run. The company has a proven track record of innovation and adaptation, and its practical use cases for AI, from enhancing online shopping to improving warehouse efficiency, make it an attractive bet for investors looking to capitalize on the growing demand for AI solutions. Ultimately, the question is whether Amazon's current valuation is justified or if it presents a buying opportunity. The company trades at a price-to-earnings multiple of 35, which is significantly lower than its historical average. While some may see this as a sign that Amazon's growth days are behind it, others believe that the stock is undervalued and poised for a rebound. As we weigh the pros and cons of investing in Amazon, it's essential to remember that the tech landscape is constantly evolving. What seems like a sure bet today can quickly become yesterday's news. But one thing is certain: Amazon's commitment to innovation and its willingness to invest in emerging technologies like AI make it a company worth watching. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic show so far, discussing various topics that impact your investments and financial well-being. As we wrap up today's episode, I'd like to bring to your attention some significant news that may have a bearing on your investment portfolio. You may have heard that U.S. President Donald Trump has announced new tariffs on a wide range of imported goods, including pharmaceuticals, furniture, and heavy-duty trucks. These tariffs, which will come into effect on October 1, include a 100% tariff on branded or patented pharmaceutical products, unless the company has already started building a manufacturing plant in the U.S. Now, this move is likely to have far-reaching implications for various industries and investors. The pharmaceutical industry, in particular, may feel the pinch, as many companies rely heavily on imports from countries like China and India. Similarly, furniture manufacturers and heavy-duty truck makers will also need to reassess their supply chains and pricing strategies. It's worth noting that these tariffs are part of a broader trend of protectionism and trade tensions between the U.S. and other countries. While some argue that these measures will help protect American jobs and industries, others contend that they will lead to higher prices, reduced competition, and decreased economic growth. As an investor, it's essential to stay informed about these developments and consider how they may impact your portfolio. You may want to review your holdings in pharmaceuticals, furniture, and automotive sectors, as well as companies that rely heavily on international trade. It's also important to remember that tariffs are just one of many factors that can influence the markets. It's crucial to maintain a diversified portfolio, stay up to date with market news, and consult with a financial advisor if you're unsure about any investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.